Welcome to Commodities, and here we're looking at gold, and our target yesterday that we were talking about was the 38.2 retracement level coming in around the 1266 sort of area through here. So yeah, look, we're just still looking for that that particular target area. We can see from the 1250 area here, the midpoint here, that we've got this strong move here. This is like a little third wave here, so we're going to see this is a fourth wave here, so we'll see a little fifth wave there. So we can just drill into that a little bit. It's a little bit obvious here in terms of let's get my drawing tool out. The wave 1 here, the 2 here, the 3 here, the 4 here. This is obviously moving across the 1260 area here, so once that's completed, we'll see a little fifth wave up through there. See if we can just drill into that a bit further. From here, you can see from the 1250 here, you can see 1, 2, 3, 4, and 5 here for wave 1, back for wave 2, the 50-60% retracement level, and then the third wave up through to here. So this is some type of fourth wave here, and once complete, we'll see a move higher. Because the extension's in wave 3 here, we should see wave 5 here be roughly the same size as this one here. So we can look for basically 5 points here from the 60 here, taking us to the 65 area through here. This whole pattern here by the buy is really sort of acting like a bit of a third wave rather than a wave C of a wave 4 to the upside. So we'll be a little bit mindful for that. The idea yesterday was to trade from, well, for scalpers anyway, from trade, I think it was 1253 here, support to the 1260, get out, and the same goes from here as well. You could watch the what can I say here? Look, anywhere above these highs here would be fine. So nice support on 1261, 1262, 1263 would get you up there. So the idea with wave 4s is not to jump the gun too early, because wave 4s are not like wave 2s, which are simple, sharp, and whatnot. These ones tend to be more sideways, and this would be pulling back 38.2%. So by just looking on a 5-minute chart here, it's probably about right now anyway. So yeah, so it's probably about right now. So this would be the A wave, the B wave, and the C wave coming through here, but the end of the session tends to diminish price action and whatnot. So look, just this is obviously the supply. There's orders sitting here, so any break above that would be fine to the upside. The silver market as well is chirpy and has retested the $19 again here, so we can also expect further upside here. One of the main points here though is this little level here, the 1930. This as support, as tested support, would see the price at 1950, so just be mindful of that. But as I mentioned yesterday, we know we've got a nice tested support on the 1900, so that puts it into a positive bias. And the 1930, the top of group 1, 3 is always group 1. Support here takes it to the midpoint, so it can struggle to find support here as well, and you'd normally see swings of a move up to here, back, maybe even a move up here higher, and it can normally swing back to the 20 here, even to 16 here. But the main point is to see some type of corrective move across here, but support here, and then taking out these reference points takes you to the 50 and even higher. But this is support, so we don't short. The copper market pretty much on track. This move down through here is basically in 3 waves at the moment in terms of 1, 2, 3. So we're looking for a 4th wave to pull back, and then a 5th wave to move down, and then an ABC to move back, and then a move lower from here. But it's also possible that this whole move down here can just be in 3 waves and continue to move higher. But we won't take that on board. We won't take this on board here just yet until, and if we see, the correct moves coming up from here. So we're just looking at it as a 4th wave so far, and 4th waves can be tricky. Sideways and a bit complicated. When wave 2 here, I've got it as an A and a B and a C here, but also putting 3 and 4 and 5 here as well. So this current move through here is unfolding in the right way. So we're looking for an A wave, a B wave, and a C wave up through to here, which will probably sort of terminate here. But we're looking, this move here needs to be in 5 waves, which it is. So we can look at this 1, 2, 3, 4. There might be another little move higher through here, but also at the same time, what may happen is that all of this here, this A, B, and C here, can just become the A wave, and then we get the B wave over here, and then the C wave over here. So we need to be, we're just basically watching this unfold, really. So wave 4s can, tend to move sideways. So we just need to allow it to do that. The daily is also still oversold at this point here, so that's why I'm expecting a larger wave 4 here and larger wave, a move higher as well. The soybean market is on track. So we were looking for a little wave 4 here. So we've got, basic up here, we've got wave 1, wave 2 here in green, and we're looking for wave 3 in green here, which will be in 5 waves, which would be the 1, 2, 3. We're looking for a 38.2 retracement level back into the 470. It moved higher than that into the 475. It's sort of okay, I guess, now that it's dropped out of group 2, the 1465 lower level here. So we want to see that retested, that 1465, and once it's been retested and confirmed that it's weak, and a retest basically looks like this. So it's a move through a level, then finding a low, coming back up and testing it, and then taking that low out there. That's your reference point there. Sure, you can get in much closer than all that, and you can read the volume on the retest and so forth, and refine your skills there, but just in a basic pattern here that's easy to understand. So look, we're looking for wave 5 down into this area through here, just typically a low below this current low through here, and that will give us wave 5 of 3 here, and then we'll be looking for wave 4. Now wave 4 here can also take us back to the wave 4 of 1 lesser degree, so it can move back to here as well before we see any further downside. One thing that we have to be mindful of as well is that, I have this as an A and a B and a C, a 1, 2, 3 here, but it may end up being an A, B, and a C as well, and terminating here. So we'll be, we won't be sort of getting involved in this little area here just yet, unless the 1472 becomes a nice tested support. Then we'll look at going long from there. But I'm quite happy with the 5 waves down here as such, because wave B over here is really quite a nice 3-wave structure here. So that would give us 5 waves over here and bring us down into this area here. So hopefully if we see this nice 5 waves down here, we can start looking to buy down here on a little bit of evidence as well. And a lot of the other commodities like wheat and corn and coffee and sugar on the weekly chart are all really oversold as well. So we're looking later this week or next week. Things always take longer than we anticipate in everything we do, basically, not everything, but most of us normal people that don't have great planning skills things tend to take a bit longer. So let's just see how we go with that. But we are looking for lows in many of the grains as such. So that's the same for wheat here as well. Expecting a little bounce off the 600 here. I wouldn't expect too much of a bounce based on the wave count here. So we've got 1, 2. We're looking for the 3rd wave here. We can see 1, 2, 3, 4, and 5 here for the 3rd wave. The 4th wave and the 5th wave is something like this here down into the 580, 590 area. So we're looking for a low in here later this week, early next week, so to speak. And then, if on all of these grains, if we can see an impulse wave that's going to move to the upside here as such, then we're on our way to buying. But sometimes I've noticed with the grains, when they have their lows here, they just get this spike like this, and it's unreadable. But the spike normally sort of settles a little bit, so we'll look for that settle, and we'll take the risk in moving in on a position like this here, as such. The corn market's pretty much the same as well. That might be the fifth wave just making a new low below here. I was looking for 440, but we've got little 1 and 2 in here. It's going to be a 3 and a 4 and a 5. It may move down further, but like I mentioned, the weekly is getting deeply oversold now. So, we're looking for a bit of a snapback. I don't have any evidence of that, so just be mindful of that as well. Basically this trend is still down, but all we're doing is looking to call it up, and it's not the easiest pattern to count all the way down with these as well. But as you can see here from this high here, it does appear that we've got wave 1 and wave 2 here, the wave 3 down to here, 4, and then the extension in the wave 5 here. So we may even have an extension here as well. This may come much lower than I think as well. It may just come much further down here. I'm not quite sure, and I'm not that sort of fussed about it either. It's not really about being right or wrong and picking the low here. What we're looking for with all the grains is basically some type of impulse wave to the upside, and we'll be looking to buy on the retracement of that. Nothing really to be sort of said or done apart from that really. And the same with the coffee as well. You can see that this is a weekly chart here. The stochastics here are just moving down, moving right back into a buying sort of area. And this is the same with wheat and corn and sugar, and also this market here as well. So we just, we're sort of searching out lows now with these markets. So anyway, that's sort of that. I won't go into the details here. The idea was to trade it to 165. It's hit that area there. So if you short cover and then look for 165 as a retested resistance, as such. The sugar market as well. It's basically, look, the $17 is the 50% retracement level, and the $16.50, the medium level here, is the 61.8 retracement level. This move down here probably could be counted as 1, 2, 3, cross for 4 and down for 5. So we may have a low in here. And this does appear to be a bit of an impulse wave up here with an ABC correction here. So we may see this just push up from here. But at the moment it's under the $17. So the sellers are in control of the market. And until that's proven otherwise, then, we don't have any evidence as such. But I'm not that fussed here again as well. So the sugar and the coffee and those things, we'll see a turn in all of them. Yes, some will turn before others and so forth. But we need to wait for a setup and so forth. So support on the 17 here is something that we're looking for, and also 1730 here as well. But while this market, it had this in the bigger picture here, it had this as support. The bounce, and then now it's resistance here. So the reality is that this is still trending down, and now the $17 is the resistance, and the sellers are sitting at $17. So unless those sellers are supplies taken out with demand, then this trend is still pointing down. We're just understanding that that it can kick back, and we're just looking for that sort of opportunity really. The orange juice is on track, got a bit of a mind of its own, and it's heading higher, so we'll still stay long in this. We'll still keep the stop out of the way here at 159. You could probably bring the stop to 161 or 162, but we've got to face this wave 4 here, and the wave 4 could pull back to 163, which would be nice. However, it could pull back to the 162. We just need to be a bit mindful of that. The 162 is a little bit like 61.8 in a sense. So I'm quite sort of this is a bit of a when you see this number, it's a bit of a balance point in the market as such. So, but anyway, look, this market here, we're very close to the top of wave 3 here. It may push higher and whatnot, but we are looking for some type of correction that can pull back to the wave 4 of one lesser degree here. So, and wave 4s tend to be sort of sideways and so forth. So we'll probably spend a bit of time here before moving higher. The other point here is that, you know, it's clawing its way into group 2, which is 165. So once it's in there, that's actually a positive thing, and we can start looking at the 172. But as I mentioned here before, this particular pattern here is in 3 waves, so that's why we're looking for a 5-wave move up above this previous high here, which will take us, looking at this particular structure here, will take us close to the 170, 172 area through here. The size of wave 4 will be interesting because the larger and the bigger and uglier this is, the more sideways it goes, then the stronger the next trend and higher the next trend, because we can normally take the distance sideways and square it up with the distance in price to the top side there. But all important levels in here. 68 is important, even number, whole number, 170, and then our normal 172 as well. Alrighty, well that's it. Just one more point here. The US dollar here is it never found the 80.50 as resistance here, and it's above here, so it's moving higher, and this move up here appears to be impulsive, so it can certainly move higher, and that would be in line with the trading levels, but not the Elliott count. So the Elliott count would need adjusting in this particular instance, because this market is pushing higher. We hadn't really, this move down through here was a little bit uncountable, but you know, it could have been counted as an impulse wave to the downside, and it still may do that. It can, you know, this, to be a bullish market, this would have to take out this high here to prove that. Otherwise, this is down for 1, back for 2 here, and down further. But you know, according to the levels here, we don't have any evidence of a bearish market here. The support on top of, well, being above 80 brings us into a positive bias straight away. Being on top of group 1 here is another layer of a positive market, because the orders have shifted from 80 up to the top of group 1 here, and that's what group 1 does. And then we've got the midpoint here as well. So you know, it hasn't really been tested as support as such, you know, since it's been sold off from the ECB meetings as such. But yeah, you know, if you took this out of the equation here and then just grabbed this pattern here and popped it, you know, in line with this pattern here, that's, you know, that would be the same trend, you know, just continuing on its sort of merry way. So once again, we'll see how it handles at the 81 as resistance and support as well. So we'll see what pattern develops there, but you can certainly see this pattern getting to the 81 there. So there's still strength in the US dollar, which in turn, you know, places pressure on those commodities to one degree or another. Alrighty, that's it. Thank you.